James,
Raf.
what do you know about Italians? Anything?
Uh,
You ever met an Italian?
I've never met an Italian. I've actually never met an Italian or anyone of Italian descent. I'm familiar with the glory of ancient Rome.
Mm-hmm. Are there any Romans left?
Yeah, well, we are. We're the last of the Romans.
That's true.
We're the last of the Romans. Apart from that, when I think of Italy, I picture it in my mind. I think of the rolling hills of Tuscany.
Yep.
I think about, the Colosseum.
Yep.
Venice.
About the Leaning Tower of Pisa.
Leaning Tower of Pisa.
That's an embarrassment.
That's a complete embarrassment. After all these years, no one has thought to do anything about it. It's just a people lacking initiative, is what I would say. So that's what I picture. I picture the beauty of the Amalfi Coast. But I'll tell you something I don't picture. Software.
That's right, folks. Today we're talking about Italian roll-up company.
Italian software business.
Software business. They may now own some of your favorite apps.
Some of your favorite apps could be now owned by Italians.
Yeah.
We should have maybe built up to that because that's a really scary thought. But it's real. The company is Bending Spoons.
Yeah.
And I just want to flag, I wanted to do an episode on Bending Spoons in December where we would have been so red hot off the press. You would have been hearing about this company that no one had been talking about.
Yeah.
Probably an exaggeration. But unfortunately, we come to you now in July after they have hit the public markets. Bending Spoons went live on the NASDAQ.
Now, on episode 2, though, we're going to be talking about... what are we talking about?
Xbox.
That's right. Microsoft, the latest happenings there. Big people being fired.
Strategies falling to pieces.
Yeah.
Carnage.
Computer game companies being sold off. What's going on at Microsoft? Oh, and we need to mention one more thing about Facebook.
Okay.
Which we forgot to mention last week.
Did we?
To do with Mark Zuckerberg and cooking.
Oh, yeah. Okay. Well, maybe we'll save that for the end of the free episode. So if you're wondering, stay tuned. Anyway, so we're going to talk about Bending Spoons, which is a really interesting company. Really, really interesting company. They just floated on the NASDAQ for $25 billion and they popped on their first trading day. I think they were up to about $40 billion in trading, which is crazy.
Yeah.
That's a huge company. They are an Italian software business. And the reason that people have been talking about them, they're based in Milan, founded in 2013 by a guy named Luca Ferrari. Pretty Italian already.
That's an Italian name.
Yeah, Luca Ferrari, Matteo Danielli, and Francesco Patinello. They basically had a photo app sharing startup, which went nowhere. They were based in Copenhagen at the time. And with the last $40,000 they had, they used it as seed capital to go after what Luca Ferrari describes as the best of both worlds of Berkshire Hathaway and a technology company.
Wow.
Now, the reason you might have heard about these guys, apart from the fact that, they just floated on the NASDAQ for $25 billion, is the fact that they own a collection of really, really strange assets. They're a roll-up company. They've basically bought up distressed software businesses and they're rolling them up into a business. We'll talk about how that works. But I'm just going to list off some of the companies that they own. They own over 50, but AOL, America Online,
yeah,
Evernote.
Yeah, I mean, a lot of people liked Evernote.
I think we'll get into Evernote because I think that's like the biggest part of their strategy, basically. It was an early company they bought. Vimeo.
Yeah, I mean, that was big. Vimeo's still pretty big.
WeTransfer.
Yep.
These are all bangers.
These are great companies to buy.
Eventbrite.
Yeah.
I don't know this one. I might Meetup. So it was one for organizing IRL meets. StreamYard. I know that because we use StreamYard at Capital Brief. That's how we stream our weekly subscriber calls.
This is the thing. Like, these are all companies that you will have interacted with in one way or another.
Yep. And then there's a whole massive...
Maybe not Evernote, but like a lot of people did massively. And again, we'll get into that in a sec.
Anyway, there's a ton of other companies, like ones that I vaguely recognize, like Filmic, which was like a video app editing software. I vaguely recall seeing that around. I never really used it. But anyway, there's a whole big collection of these companies. And what unites all these businesses is the fact that they were at various points between the early 2010s and let's say the early 2020s, kind of big businesses.
Yeah.
They actually, I would say the criteria, they all fit into like a classic down round thesis we always come back to, is like, you don't have to be Meta.
Yeah.
Sometimes it's a nice little business. It's a nice little earner. Forget being Mark Zuckerberg. Forget being dragged in front of Senate committees. Just make your $200 million of annual recurring revenue.
Yeah.
And shut the hell up.
Yeah.
Who
And
cares?
be happy.
Unfortunately, you can't do that.
No.
Because you have investors.
Yes.
You have people who poured in to Evernote back in 2013, venture capitalists who were like, your note-taking app is going to change the world.
Yeah. Yeah.
And they bought in on that assumption. So it's a little bit harder to just be cruising along at cruising altitude with your earnings. That's basically it. A lot of these companies that were promised that one day they pitched a vision of a technological future. It did not happen. Lots of early employees, lots of founders who want to get off the merry-go-round.
Yeah.
Bending Spoons is sweeping in, and we'll talk a bit more about their business strategy, and they're buying them all and rolling them up.
Yeah.
And what does that mean? That means basically sacking everyone.
Yeah. And centralizing your operations somewhat.
To Italy.
Yes.
So now Evernote is developed.
But we meant by that we mean like instead of all of these companies having their own marketing, for example, there's a team of Italians in Italy who do marketing for all of them.
Yep.
A team of developers, a centralized team. You might be put onto Evernote, but like you might be on Evernote, friggin' Vimeo, whatever, and like it's shared resources. You pool the resources.
Yep.
And get efficiencies that way, as well as like, I guess the idea being move much faster.
Yep. It's sort of private equity adjacent what they're doing, but they're not doing it with the intention of flipping it and selling at a higher price. They're holding it. They want to hold all these companies.
Yeah.
And basically, it's a perpetual motion machine. They use the revenue from these businesses. So here's the key, and this is the interesting thing. It was all through their prospectus, which I read for going public. Evernote, I'm going to pull up the figure here because it's really, really, it's super interesting. So Evernote. So they bought it for $200 million in 2023. Not a massive paycheck considering how much money was invested into Evernote, but whatever. But Evernote had, when it was bought, $100 million of recurring revenue.
So Evernote, again, sorry, it's like a note-taking / remembering thing / what kind of bookmarking type thing. But you write in it as well, right?
Evernote was kind of like the first big note-taking app.
Yeah, because I installed it at one point, but I literally think this might be during uni.
I used it in early 2010s.
Yeah.
I reckon. Maybe late aughts, early 2010. It was a long time ago.
And it had an elephant, right?
It's the green elephant.
Yeah, the elephant. Yeah.
And they had like the browser plugin where you could clip stuff.
Yeah, yeah.
And this was back when they were like, it's really searchable. So it was like, take photos of like notes that you've written on the table and just chuck it in Evernote and you'll be able to search.
That's right.
You couldn't. This was pre-AI, so you couldn't really do anything with information. It just meant that if you punched it, you could tag everything.
Yeah, it was just a place to store all the kind of words and things you interacted with. I never got deep into it.
No, but this was like, there were productivity hack people back in the 20s who were like, I run my life through Evernote.
Totally.
And it has changed me, and now I'm so organized, and I take photos of my shopping list and put it in Evernote, and then it's searchable. Like, this was crazy to be doing. I mean, the main problem with Evernote is all of its features just got lifted and put in Apple Notes. Yeah. Apple Notes probably has like 75% of the features of Evernote. And why would you need the other ones unless you're a full-on power user? Yeah. And then I think Notion was like the next phase of it. It was like, no, your note-taking app can be like a platform to do all sorts of cool shit. Yeah, yeah, totally. So it was actually kind of like an early version of Notion in terms of the way the tech people talk about it. Yeah, yeah. But as you say though, 100 million in revenue, obviously a lot of people were locked in. And this is kind of key to the whole their business model. Yeah. They basically said in their perspectives that like the retention rate for Evernote subscriptions is like 98%. So if you were going to churn out of Evernote, you would have done it. Yeah, you can't leave. Like the lock-in. There are no new features. There's no new anything. But you can't leave. You've been putting your whole fucking life in Evernote since 2012. Nobody likes to do anything. People will pay that tax to not have to think about moving to another app.
Well, this is the whole thing. So they upped the price and cut a bunch of features, basically.
Yeah. So that the personal plan for Evernote after Bending Spoons bought it went from $100 a year to $249 a year.
Bang.
To these big, and I'm sure there are people who are like, "Fuck this" when they saw.
Oh yeah.
it.
My understanding is they did see a bunch of people leave, but like more than justified by the price. Like they would have to lose, 2/3 of people, obviously, for that to start even making a dent.
Yep.
But like not that many, and by now they're actually above what that number was.
And if you didn't leave after it was 2.5x for a program that had less features, you are not leaving.
No, you're never leaving. Totally. And they sacked something like 95% of staff.
They sacked basically the entire US staff. So again, it's all run out of Italy now. So the free, this is the other funny bit, the free tier of Evernote was cut to 50 notes. Not like per month or whatever.
Just total. So it was like, you got to pay or you're gone. If you had more than 50 notes.
You can only have 50 notes on the free tier. Again, I don't think that they anticipate there's going to be new people signing up for Evernote. This is purely like...
Well, it is slowly happening.
Yeah.
For whatever reason, people are... I'm sure it does have some features. This is the other thing. Yeah, they stripped a bunch of features, focused on the core product, which is probably... It's like some people want a central repository across their devices. If you've got like a Windows laptop and an iPhone, maybe that would be, like you can use it on both or something.
Like the elephant speaks to you. You like that little elephant logo. Their
what
revenue.
I want to know what they're like. I'm just going to go to their landing page. Like, what is the sell? Is the sell like remember everything? Evernote. Let's have a look at like how are they pitching this? Okay, cookies thing, of course.
Your second brain.
Remember everything and tackle any project with your notes, tasks, and schedule all in one place. So just generic productivity.
This is very generic, yeah. Oh,
like, as you say, it looks
features?
exactly like Notion. But I guess it doesn't look as scary as Notion.
Yeah, it's got a bit more of a normie vibe to it.
Tokyo
like Notion
conference.
Notion feels a bit pro user. It feels like take your startup to the next level.
I guess that is a different positioning because, like, again, what your second brain remember everything. That's not what Notion is saying. Like, what is Notion saying? I bet it's saying like AI enabled something. The AI workspace. Yeah. Oh my god, it's all where teams and agents think together.
Yeah, it's
full.
You're not talking to normal
capture
people.
Context, find answers, and automate tasks with AI built for your team is what Motion's pitch is at the moment because it's going full enterprise. Whereas Evernote is individuals, your second brain, remember everything. Yeah, okay, I see it.
Yeah. So
I mean, I wouldn't use it. I would just use Apple Notes, but or Google Docs. Like whatever.
Yeah, I think this is just like exactly the model that Bending Spoons takes. Find a model that has. Basically, treat it as a cash flow machine. There's a bunch of people that are not going to churn out, or like we can really turn the screws on these people and they won't change.
Yeah,
absolutely. We're not trying to win VC magic dollars anymore. So like, don't worry about becoming the next platform for productivity.
No,
don't worry about like chasing everything. Just like put a bit of AI in there and run it with an unbelievably small team in Italy.
Yeah, exactly. Just margins.
I think
they're just like, let's just make this as high margin as possible.
I'm pretty sure their engineering and product team is like, as a whole org is like 600 people. And this is to cover all these different apps they do. The other one, so this is interesting, AOL, they bought it from Yahoo in October 2025 for 1.5 billion. But great deal because AOL still brings in $633 million of revenue per year.
Which is, AOL sell is discover the latest breaking news in US politics. Stamp prices are going up. How much will forever stamps cost?
It's a great question. It's mostly ads and subscriptions for tech support and malware protection is what the most of that business is. $633 million a year. It's about half of group revenue for the whole of Bending Spoons. It's just AOL.
AOL, just like those like bundled antivirus.
Yeah,
with like Windows.
Again, these are boomers, but
Dells or whatever.
Sure, I didn't dive deep into the risk section of the prospectus, but surely just like everybody dying has got to be part of it because that would
people are living longer.
Yeah, that's true. That's a bullish thesis there. But you go through each of these and you see...
This is so good. Sorry, I'm on AOL and it has targeted me. It's like it knows I'm in Sydney, New South Wales, but then still giving me the weather in Fahrenheit. Come on, guys. Come on, you eye ties. You got to sort that.
Go on to the boys in Milan. Head in the game, please.
Like I'm sure we've got Italian listeners. You know, if you know these boys, there's a good chance if you're one of our Italian listeners, you'd know someone at Bending Spoons. I would hazard to guess.
Totally.
Tell them they got to sort out that their location needs to also change. You know, between Fahrenheit and Celsius. Simple fix on AOL on AOL.com.
Absolutely. But anyway, you go through like all the businesses they have. You see the exact same story over and over again. WeTransfer. I mean, that used to be. I mean, WeTransfer was great. You could send stuff.
Yeah.
You could send big files before there was cloud storage. Was a big deal.
Was WeTransfer the nice looking one? I think it was.
Yeah.
Oh, and then it changed itself to We.
Yeah.
At some point, we might have even talked about this.
We might have,
because I think that WeTransfer was. I mean, it felt like it started as the piracy type one, like at the same time as like whatever, like Rapid Gator and all those ones. But was it WeTransfer? I think it might have been that actually looked kind of pretty at one point, and then they started releasing features like a different, like a slide deck thing, and they called themselves to like We or the We group or whatever, and like they were doing a thing, but then obviously got bought by.
Yeah, and if you look at it now, you see it's kind of, you can see the same design team are working on Evernote. It's really the same thing with a different color palette.
Yeah,
but WeTransfer bought in July 2024, cut 75% of staff. The free plan was brought down to 10 transfers per month. The guy who co-founded it went on a big tear about how they were ruining the product and he was going to release a competitor or whatever. But again, I would assume they've still got a vertical for like some businesses that are using it.
I feel like WeTransfer was used a lot by like photographers and like in media agencies and that kind of thing. Like,
That's true.
I remember seeing a fair bit of it.
I used to get a lot of WeTransfer links.
Yeah.
Like early in my media career, I would see a lot of them.
Yeah, I feel like that it was kind of the one, and like for video files, just like, and yeah, sending galleries of photos from professional photographers, like professional photographers or whatever, would use WeTransfer. They'd have a WeTransfer. But this is the same playbook with Vimeo, right?
Vimeo's the same, yeah.
Like you can feel that, you know, again, if you're a photographer or whatever who's used WeTransfer for 10 years, you're not leaving.
Yeah. And if you've got your whole portfolio uploaded on there, it's probably embedded in it because Vimeo really pivoted hard to like.
Well, I'm talking about even WeTransfer, same thing, though, right? Like if say you're a wedding photographer and you share your files via WeTransfer, I bet wedding photographers all the time get someone's 3 years later being like, "I've lost all my wedding photos. Do you still have them?" And like, if you stop paying for WeTransfer, you'll lose all those files. So you're gonna have to somehow re-download them all and re-upload them somewhere else. It's probably the same price.
Yeah.
So, you know, I can see it. Like, I can see the lock-in.
Totally. And you're right. Same with Vimeo. I know at some point, like early on, they were kind of like
arty YouTube.
Arty YouTube. I was going to say exactly the arty YouTube.
Yeah.
Where it was like that's where you would put short films and stuff that was a bit had higher aspirations.
Yeah.
But then it mostly became like a business video hosting platform.
Yeah, they intentionally, I think, pivoted to that, right?
Yeah, because they're never going to beat YouTube. And what's the market for like short films being uploaded? And also, I'm pretty sure the like quality used to be higher on Vimeo. That's
I think that was the early thing, and that's why it became the short film one. Because it's like if you're an artiste director, you want people to see it in like higher resolution. That obviously was no longer like a differentiation. But yeah, so it became kind of more like a place for they had the clean embeds, on websites. If you had a Vimeo, it would be like a clean embed. It wouldn't have like the YouTube stuff around or whatever.
Yeah.
And then B, they really made a big deal out of like private videos and commenting and like in a more kind of private way and like, private galleries of videos and that kind of thing. So again, for business, but yeah, that's never going to be a YouTube. That's
totally. But you look at the numbers that they pulled out. So Vimeo, they bought that in September last year for $1.38 billion, all cash. That's a pretty decent chunk of money for a company that had completely fallen out of the public eye.
I wonder how much they raised over the years.
Yeah, totally. So Vimeo Enterprise made $83 million revenue in 2024 with 4,000 enterprise subscribers and an average revenue per user north of $22,000. So I mean, like that's a relatively juicy bit of like business.
Like, yeah, exactly. I guess that means that, just big businesses at some point, someone 15 years ago started like using Vimeo to share videos internally for like.
Or embedded on, wherever. I mean.
And then it just grows, right? And like, again, 15 years later, you're not leaving.
Exactly. Yeah. EBITDA of $55 million and a $1.38 billion cash. It's like pretty solid. But anyway, I could go through all of these numbers that I pulled together. Eventbrite, $500 million acquisition. And Eventbrite was, again, like you say all the time.
Absolutely. As someone who was like if you're putting on a party or whatever, going through Ticketek or whatever was a real pain in the ass. Eventbrite, you could just like start an event. It was super easy to do from home. Like anyone could do it.
Yep.
Like Ticketek and stuff was, like I feel like there was heaps of friction and like weird payments and whatever. Whereas Eventbrite is just like you log in, you put up an event.
What's the current?
Is Moshtix the one? I don't know. I feel like I haven't been in the promotion game for a long time.
Yeah,
now,
I'm just trying to remember like when I go to something that isn't like a major gig or like what am I doing it through? I can't even remember. I feel like
Eventbrite is still the one. If I go to right now, I'm gonna go. Here we go. This is great stuff. You guys love when this is happening. Let's go to Resident Advisor and see some upcoming events in Sydney.
You're looking at what are you looking at?
I'm just trying to find like a random small event and see what they're using.
Well, I'm looking at what is being advertised for Sydney on Eventbrite. We've got watching the All Blacks versus Ireland at the Greenwood Hotel for $17. Almost
you have
full.
to pay to go and see it.
Yep.
Tickets. Here we go. Humanitix. I've seen Humanitix around a fair bit. Humanitix.
Yeah, right.
I think I bought something on Humanitix the other day.
There's a HSC workshop for English Advanced at Marrickville Library. That's free. Advertised on Eventbrite. There's there's a friend of the pod, Gina Rushton, speaking at Marrickville Library. Advertised right here on Eventbrite. So,
great.
G'day, Gina, if you're listening. I know you are.
How much does that cost?
Free.
That's free.
Get on down.
Get on down
to Marrickville Library to see, if you're listening, Matt Bevan chats with Gina Rushton. Guys, get on down there. Anyway, so that's interesting.
That's good. That's what's happening in the ticketing space, folks.
That's what's happening at local events in Sydney, in case you were wondering. But look, yeah, obviously you're seeing a theme here. They are finding these businesses that have pretty decent recurring revenue.
Yeah.
In the hundreds of millions of dollars.
But I bet they're not growing, right? That's the kind of thing. It's like none of these businesses would be growing.
Yes.
So the vibe is investors aren't that interested in anymore. They're not going to be raising any more rounds of funding. They're probably over the years got a whole bunch of different features and picked up staff to manage those features, this, that, and the other. But that said, as you say, these all seem to have healthy revenues, right?
Yep.
And some of them healthy margins. Founders want out, buy it, strip it bare. And again, the difference between private equity is like private equity will buy out, fire the board, maybe put in like an executive and then restructure, don't get me wrong, like and make it leaner. But this is like cut 95% of staff.
Yeah, butcher them, keep that like juicy revenue, increase it by jacking up the price.
Yes.
Because those people aren't going to churn out, and then use that revenue to leverage to get more.
Yeah.
So they talked about in their prospectus that they have 1,000 companies on their hit list. Obviously, part of this is just like IPO shenanigans, I would assume.
Yeah.
But like also, I think it is true.
We could be on there.
Yeah, down round. We have an annual recurring revenue of $500 million. And we ain't growing, folks.
No one's churning though. They're locked in.
Yes, you're locked in here with us. Yeah.
They're locked in until the end of the lunch bet.
Now, the other thing I think is interesting, and part of this you need to, again, put down as a bit of IPO theatre, but two things. One, I think one of the reasons this popped, the actual figure is it got up to $25 billion market cap. One of the reasons I think it popped is that this is basically a short bet on software expressed as a long, right? You are essentially betting there's going to be more software carnage in the future for them to pick up, right? They're going to be more businesses. They're going to be left by the wayside and destroyed by either the current movement or just like, the exuberance of the 2010s or whatever, that they're going to have fresh meat on an ongoing basis.
And a way to think about it as well is potentially like a kind of like VC arbitrage thing where it's like you've let these VCs put all this money into these businesses
for user acquisition, basically.
But like for user acquisition, exactly. And as you said, like a lot of these businesses probably, especially late stage investors aren't getting a return on. And you leverage like that VC input for the growth and then come in, strip it and just take your dividends.
Totally. Because if you accept that Evernote is probably, you can make it grow, you can do
But yeah,
can buy ads.
allegedly it is growing slowly though. You know,
Slowly.
this isn't like you know 50% growth year on year or whatever.
And if you accept that it's not going to grow massively, there's no way to make it grow massively by chasing every shiny thing in the world. You can cut the staff down to almost nothing. How many people does it take to maintain a Notes app and maintain the website and keep it going?
Yeah.
If you think about it objectively, not very much at all. The only reason that Evernote used to have a ton of staff because they were like, we're going to continue to grow the business, build new features, attract new users, do all this kind of stuff. If you take like a nihilistic view and say, well, the market for like a kind of okay Notes app is pretty much at its ceiling.
Yeah. We just need to keep it up, keep people from churning, basically, and slowly acquire people who just end up there.
Yeah.
You know, I mean, look, I don't hate it.
No, I totally. I mean,
it sucks for people who lost their jobs in these like businesses and whatnot, but like, you know, they're kind of turning them into what the down round thesis of like nice little businesses.
Nice little businesses, yeah.
Except in this like ultra kind of pressure cooker, 25-year-olds running like 4 massive brands or whatever.
Totally. It could be absolutely disastrous, don't get me wrong. But it's also like, yeah, it's fine. And I think every boom industry tends to get like its sort of like roll-up abattoir at the end of it, where it's like, all right, there's a whole bunch of businesses that didn't die, but also did not shoot the lights out and are sort of just hanging around.
Yeah, yeah.
And then you need some like ruthless Italian operator, not always Italian, to come in and sort of just like bayonet the wounded. Be like, all right, sorry, mate. It's not happening.
Yeah, that said, as far as like, you know, valuations, etc. are concerned, I mean, I do get buying the dream or whatever, and maybe one day, yes, they'll own 1,000 companies or whatever. Yeah. But the profile of this business is basically like we are a, you know, relatively decent margined, but like not insane margined, disciplined company.
Yes.
Like the growth is somewhat limited by like the revenue. Well, and they have an ability to raise funds now, obviously in the public markets or whatever. And they were disciplined early with like not selling too many shares. Like I believe the founders have like masses of equity and they like did a bunch of debt funding early and whatnot. But as far as like is Bending Spoons itself, whilst it's a very impressive business and like very sick, but it's like, is this going to be a company worth $100 billion or $200 billion?
Probably not. When it comes down to it, none of the brands they have are exciting people. But I mean, like, you know, maybe that's fine. But I agree. And I also think that like for this to work, there needs to be more fresh blood coming in, especially if these businesses are not growing.
But
massively.
And that's kind of your thesis here is that like the investor thesis is there'll be plenty of fresh blood.
There'll be plenty of fresh blood. I saw an article that said, oh, look, maybe the current AI moment is going to produce a shitload of mid-tier businesses that get swallowed up by a company like Bending Spoons or maybe Bending Spoons and stuff. But I was like, no, the cost base of AI is pretty fucking crazy.
Yeah.
There's not a lot of just like sitting around and accruing users. Like you're paying for tokens and shit.
Yeah, and also like look at the profile of these businesses. They're all like 20 years old.
Yeah.
I feel like that kind of needs to be part of it.
And I think, I agree that's very much part of it. Although actually, speaking of AI, it is worth mentioning, obviously, IPO theater, everyone says this, they lean into the AI thesis super hard in the prospectus, but it's on the basis of AI does 90% of our code and localization and everything.
Yeah. Like our costs are staying low.
Our costs are incredibly low because we just use AI to like run Evernote.
Yeah.
And, you know, I think that's actually, whether you buy into like AI helps software be good thesis or not, you probably agree that that's probably true.
Yeah.
Like if your job is maintenance and just like looking after the Evernote code base and like tinkering here and there, making a few changes, plugging Claude Code or Codex into that, it's probably good.
Yeah.
It's probably good at doing exactly that kind of shit.
Yeah. User reports bug, like fix bug.
Fix bug, exactly. If just Claude Code plus 6 Italians, and you can run like several businesses totaling $3 billion of revenue. There are 2 companies that this sort of doesn't even just remind me of, that it is like. The first is a silly one, which is a company that ran this exact same thesis a few years ago. I think we've talked about them on Downround. It is Media Lab, which used to be Whisper. These are the guys that bought Genius, formerly Rap Genius.
Yeah.
Imgur.
Yeah.
World Star Hip Hop,
I sense a theme with at least 1 and 3.
Kick, Amino. Don't know what Amino is. They used to have Dat Piff,
Yep.
but it's certainly not advertised on their website anymore. But this one was a bit different. This is just like nothing to do with revenue. We just have non-churning impressions that we can put ads in front of.
Yeah, yeah.
So it's like, doesn't matter what we do, there's still going to be 200 million pedophiles using Kick. and they would love to buy products. So put it in front of them.
Yeah, yeah. There's a few of these. And like, I think we talked about a company that did the same thing with apps, basically, where it's like they didn't give a fuck what the app was. They had something like 250 of them, and they just were like, oh, okay, your users are this, your revenue is this. We'll just jack up the price of gems, put more ads in it. Sweet. We've got 250 of these, and we'll manage them all because it doesn't matter. Like, they're supposed to be dog shit.
Yeah.
And then the other way you're kind of hearing about roll-ups at the moment is like the sexy thing that people are raising heaps of money over is AI roll-ups, right? Like it's kind of fun. Like the bending spoons thing is fun because it is in this environment. It's not, and I know they frame it as an AI play from the efficiency perspective. And again, like that feels almost more like honest than a lot of the other plays. But like, the classic roll-up play right now is like we buy all of the, body corporate businesses or whatever, and then we use AI to run them all.
Yep.
And make heaps of money that way.
Yep.
Which, again, maybe that works. But there's a lot of people getting funding, former PE guys or just like young people who like consultants who like have jumped over to like doing startups being like, we're going to be a, dentist roll up.
Yeah.
Dental software roll up.
Yep. Yep. Totally. I mean, all this stuff just comes down to like how close to the bone can you cut and keep all these disparate pieces working with the same back office, and can AI like optimize and streamline and whatever. But yes, you're right. There's tons of interest.
But I will say, you said earlier, chuck Claude Code at the bugs. I don't think they'll be using Claude Code.
Yeah.
I suspect it'll be a model that doesn't mention Tiananmen Square.
Exactly.
Like if you're like looking at cost cutting and like running things as lean as possible, you're using a Chinese model.
Exactly. Again, one of the great theses. This is another down around thesis, folks. In the long run, we are all Chinese.
Mm-hmm.
We're all becoming Chinese, and the quicker you do it, the better. I will mention the other. This is like just because I had it in my notes to talk about, and I don't think we've talked about this business before, but it is like a really interesting one. Canadian company. So for our Toronto listeners, I know there are a few of you.
For our Canucks.
Our Canucks. Constellation Software, listed on the Toronto Stock Exchange. It's run by a guy called Mark Leonard. He started in the mid-90s. Been doing it forever. It's a roll-up business, but its entire thesis is it finds vertical software companies in niche industries. So it'll find companies that do like course management for golf courses. Like someone has built a bit of software that purely is for looking after golf course booking and things like that, which is, that has an identifiable addressable market. And once you saturate it, the only way you grow your business is when someone makes a new golf course. And
the opposite seems to be happening, folks. They're taking our golf courses from us.
They're taking it away. So, like factory management stuff, industry-specific software, the whole strategy of Constellation Software is they roll in and they just buy that. And they're kind of famous for having like a really disciplined strategy. They've compounded 30% per annum since its IPO, which was in 2006.
That's good.
They've been rolling really well. They're listed on the Toronto Stock Exchange. And they're one of those just like weird niche businesses that all the real heads always bring up, like, oh, Mark Leonard at Constellation has a thing. And again, it's purely just finding these insanely niche software businesses serving specific industries and being like, I'll have that. These people will never churn out because no one is ever going to go after their market because they have it.
Yeah.
And it's hard and annoying and it's not that big.
Yeah, and there's no real way to break in to it.
So like you just you have it perfectly. That's not what Evernote is, but like
the reason I love, and we had to talk about bending spoons, which I know you said we should talk about like in January or December, is the companies though. They are literally just all companies that people our age just like, oh yeah, I know them.
Yeah, exactly.
I've vaguely ambiently used them.
I use them.
Like there's such an archetype of that around like the businesses. Like, oh yeah, that one. Oh, they got that one too. Okay. Yeah. Yep. Never paid that thing any money, but no, definitely, yeah.
I tried using it at uni, it didn't work. I mean, all those ones, the Bending Spoon ones, Evernote was just around. It was like
Yeah.
one of those apps.
Well, even when they have like Harvest, a time tracking app, like I worked at a place that used Harvest as like an agency that like you log your hours. I worked on this account for this long. I was like, oh yeah, I used Harvest.
Yep.
Yeah.
Yep. And there's also there's the second degree of carnage in these ones, in that a lot of the companies they're talking about were acquired by someone else during like the acquisition spree of a lot of these companies. So Meetup, which was the one about...
That one I don't know.
It was acquired by WeWork.
Oh, nice.
And they never knew what to do with it. Because, again, it kind of fits with WeWork. It's about arranging real-world interaction between people, like a booking system, and you could send out links and all that sort of stuff. But for, like, informal gatherings of people.
Like parties and barbecues and
that kind of thing. And I think, WeWork...
that market's been absolutely... like taken over by Apple Events. What's the events app they launched? Like,
Fuck, I have not heard a lot about that. You used it to organize a few UFC viewings.
Yeah. Then I realized it was easier to just like send a message in WhatsApp.
Send a message, which you had to do to distribute it anyway.
Exactly.
Didn't really work. So yeah, I can't say I've opened it since then, but they gave it a crack. I know Partiful is something that people use now. I got invited to a Partiful thing. Actually, I will say, someone invited me to like their farewell drinks while they were moving overseas on Partiful, and then they cancelled them, and I got an automatic text message that was like, "Things not on anymore." And I remember thinking, that was good. That was convenient. Didn't actually attend, but like, nice.
Yeah, the communication was
I
great.
got the immediate mass distribution events off thing.
Yeah.
Another Bending Spoons acquisition is StreamYard, which, as I mentioned, we use at Capital Brief for our weekly subscriber call. It's just like a live streaming platform, but targeted at businesses. That was acquired by Hopin. Now, you might recall Hopin were that online events business.
Oh, yeah.
That pumped.
Was it I thought it was Hoppin.
Hop in. Yes.
Yeah.
Yes, sorry.
Yeah,
It is Hoppin.
that's right. Yeah, we talked about this very early down round because like early down round, there was the bubble pop basically of like I guess SaaS, but like just like startups that were overfunded.
Yeah, it was also
it was the interest rate. It was the interest rate thing.
It was interest rate plus COVID bubble pop.
Yeah, that's right. The COVID bubble pop due to interest rates going up like 1% or 2%.
So, but specifically in case of Hopin was the pandemic era virtual events startup.
Virtual events.
That's right. Virtual events, which had reached a peak valuation of $7.75 billion.
That is crazy.
Before.
I mean, we've said it before, but people really did lose their mind during COVID. And again, this is well-worn path, although we haven't worn it for a while because AI's taken everything. But like Clubhouse.
Yeah.
Clubhouse was like the pinnacle for me because, I listened to a heap of podcasts of, VC adjacent and tech. People were speaking so breathlessly about Clubhouse as being like the future of interaction. This business is the future.
Live podcasts.
It's going to be the biggest thing ever. Like people will have Clubhouse open in their house all the time, ambiently. They'll just be jumping from room to room, and at all times, and you can choose to pop in or not. And it's like, think about the total addressable market of the radio in 1910. That's what Clubhouse is.
I don't know if I've not been paying attention to Clubhouse, but I do remember the last time I checked in to see what was still on. It was basically just like homophobic sermons from Nigeria and stuff like that. It was literally just every single one you looked at was just something demented. Like actually, like you had walked into the wrong part of town, just like mentally ill people raving. And this is something the VCs were like, if you're not on Clubhouse, if you're not in the moment hearing these people say things as they occur, you're doomed.
Yeah.
You're part of the permanent underclass.
That was like, this is why I know like a lot of you listeners probably hear this podcast and hear our nuanced take on AI. And a lot of you, like, I'm sure we've lost listeners because they're like, I used to listen to you because you guys went off. Like, you guys would absolutely go off on these companies. And now you're just like, oh, yeah, there could be something here, like middle of the road. But it's like, Clubhouse was so obviously stupid. Like, it was so, like, I opened the app once and I was like, oh, finally got an invite to Clubhouse, like, through a VC, mate, like sick. I get to finally try to see what all the hype's about. And it's like, a bunch of people talking about how to grow your personal brand in the most boring, like unedited way possible, like no entertainment.
With podcast, but worse.
Podcast, but way worse. Unedited, amateur, clumsy buffoonery. And it's like, what? This is offensive that I would waste my time like being here.
Yeah. It was bad.
And I'm hearing all this. That's why it was easy to go off, because it was so obviously a non-starter. So much of that shit was like virtual and the metaverse and virtual events getting $7.5 billion valuations.
Virtual events is crazy.
Like, I will still go off, dear listener, who's listening to this being like, you sell out cark. I will still go off on this bullshit. And I still do. I mean, but yeah, like
it was crazy.
It was crazier because we didn't have, as you've said multiple times, it was like we were in the between times. Like, we didn't have AI yet, so everyone was looking for somewhere to put money. You know, like this will be the next big thing.
With the exogenous event of like everyone is at home and they maybe won't leave their homes ever again.
Well, yeah, that was the whole thing. It was like, now that people have become accustomed to this, no one will ever go outside. Restaurants are dead. Commercial real estate is dead. No one's going outside. Well, and don't get me wrong, like certain things were accelerated, for sure.
And it's also true, there probably are some things that have not gone back since COVID. But I think people over-indexed pretty hard on the behavioural change of being in lockdown for,
from the government saying you have to be mandating you being indoors.
With the case of hop in, whatever, anybody who had to do a virtual conference or large scale online event during COVID would have known within 2 seconds that no matter how nice the technology was to make it relatively seamless, it fucking sucked.
Yeah.
No, they were not enjoyable.
No.
And it completely invalidated the reason that people even indulge conferences at all, which is like the social interaction that's sort of like glued together by the event.
And a kind of a chance to get off work, honestly, an excuse to kind of get off work and, and hang out with people and whatnot.
Yep.
Instead, you're sitting there on your computer like you were at work, working from home, watching people bang on in a Zoom call.
Yeah, exactly. And occasionally
And you have to pay for the privilege.
Yeah, carved off into like side rooms or whatever. It was no good, folks. What's that one? There's this... I don't know if you've seen it. It's like the platform that some people use where it's like everybody is like a top-down Super Nintendo RPG kind of character.
No, I've not seen that.
And to talk to someone in like a video chat or an audio chat, you have to kind of like walk up to them, and then you get the screens. And if they walk away, like the chat ends.
Okay, interesting concept. But I mean, I ain't doing that.
It's kind of like a weird. That wasn't events. It was more kind of like a interactive Slack. I mean, I might be, again, overexposed to this because, my wife works in games and I think she had to use it for some various things. And it's like, obviously they're going to gravitate to that kind of thing. But yeah, again, mass psychosis.
Yeah.
Peloton.
Yeah.
Peloton, folks.
Yeah. There was a fair bit doing. At least Peloton wasn't like a normal business. I mean, obviously the valuations and everything were insane, where it was like everyone in the world is going to be riding bikes and while they work or whatever. But, at least that was a product.
It was a product.
Like exercise bikes.
Yeah, exactly. Totally. No, absolutely.
Anyway, so next episode we're going to talk about, I keep forgetting. Xbox, very important stuff.
The carnage at Xbox, folks.
And there's another thing we're going to talk about. There's actually a little crypto thing I want to bring up on the next episode. Maybe we'll do it very much at the top.
Yep.
But we should finish by Mark Zuckerberg.
Yes. This was brought up in the Discord. We talked about Meta on our premium episode last week. If you want to go back and listen to that, we talked about a little bit of the chaos at Meta, downround.net, sign up to premium. But we didn't mention one large story, which was immediately brought up to us in the Discord, and we thought we'd correct the record.
So Mark Zuckerberg is now, I mean, obviously, like, there was that meme a few years ago of him talking strangely about his barbecuing, his meat, his smoked meats.
My smoked meats.
I'm making meats now, smoking these meats here.
So now, on a recent podcast, he mentioned that he's basically trying to create the perfect steak, and so he's breeding his own cows and feeding them beer in order to slaughter them, obviously, for his quest for, like, the perfect steak.
Yeah.
Normal topic of conversation.
Yeah, Mark Zuckerberg and his like meat thing. Obviously, this is part of when he was getting red pilled and whatever. This was like early sign he was getting red pills, him getting into meats.
But like a normal human being who eats like meat, you try not to think about, especially not get to know the cow.
Yeah, you don't get involved. I mean, but again, was it Jack Dorsey that said that he went to Mark Zuckerberg's place for lunch or something, and Zuckerberg like wanted to slaughter a goat that they could then eat for lunch?
I mean, it is, I suppose, more honourable.
There is a sense of honour to it.
But when you have a choice to not do that,
exactly, and he does have a choice,
and he's to seek it out is strange. I should say, I mean, tucking this at the end is probably like a bit weird, but like they're also basically responsible for like the big sell-off we've seen in chip stocks over the last kind of 5 days. Is Meta selling back a bunch of their compute to Google? That seems to be the catalyst of like. Well, certainly South Korean stocks have sold off somewhat due to basically being an indication of like, hold on, Meta don't have a use case or like they don't have enough demand for AI, and so they're renting, much like XAI is renting it out. Is that a negative sign for like whether you're able to monetize AI or not? Hence why sell off or whatever. So, you know, after our chat last week, there's been a little, you know, we forgot the cows, but also they may be responsible, just putting a flag in the ground, they may be responsible for the quote-unquote bubble pop.
They could be. I mean, you know, the bullish view is that this is a dog-eat-dog world, and all the bigger labs will simply eat the smaller ones.
Exactly.
There's a bit of that dynamic going, but yes, there has been a big sell-off because they acquired all these chips and they're now selling it back. Sorry, I will just read, just to end it, I'll read the quote from Zuckerberg. On the ranch, one of my projects is I'm trying to create the highest quality beef in the world. It's like this is very low stakes, right? I'm not selling it, but I'm very into the genetics of the cattle. So a portion of his ranch's land acreage is for growing macadamia nuts for the cattle. He also feeds them beer that he brews and lets the animals choose between drinking room temperature water or cold beer. I don't know which one I'd be picking.
Don't have to be a cow to know the answer to that.
That's crazy. I'm never going to stop. Like, it doesn't matter how important or whatever the thing is, Zuckerberg said. It's like, yeah, I'll do some projects that don't matter that much.
You're referring to the metaverse there as well? It's like, I don't know if you should be saying that to investors, bros.
You need to find some balance of different things to work on, because I think when you work on one thing too hard, you can burn it right and you can burn the people.
Yeah. So as my hobby, I feed cows beer so I can eat them better.
There's just stuff that you want to put into the world, and that's just how I'm wired. Downaround.net, sign up to premium. We're going to talk about Xbox after the break.
And bonk.
Okay, sure. This is news to me.